Let's assume that things go forward and there is some kind of trade deal. The Sunday tariffs are put off. Maybe some of the prior tariffs are reduced. What does the market do in response?
The market does exactly what it's doing today. What you're seeing is a nice rotation, basically toward the value stocks. We love to see the financial stocks do well. Financial stocks are essentially a call option on the economy. So when the financials do well, that's telling us that this could not only have implications for the market, but basically take some of the pressure off the economy, maybe increase business confidence. So the implications are wide-ranging for a good trade deal.
Tom, your thoughts as well here. It would seem as though this phase one deal is pretty much as advertised. If it comes to pass, it looks like there will be maybe some more protections on intellectual property. But the heart of it is agricultural purchases in return for postponing and reducing U.S. tariffs. Is that a good deal for the U.S., or are we giving up more than we're getting?
No, I think the right way of thinking about this is you remove a major source of uncertainty. I mean, I have to be honest. When I speak with clients about this, no one asks about what the details are going to be. They just want to know, is it going away or not? So I think, for most people, it's going to be, you remove this major source of uncertainty. I think, sort of people that get involved with the very micro details will sort of, call it whether a winner or a loser. But I think, broadly speaking, from a macroeconomic perspective, it's a big win. I think what you have to keep in mind is that over the course of 2019, capital expenditures have suffered at the hand of these tariff and trade wars, right? I mean, think of it this way. The fundamental pieces were in place for capital expenditures to have performed really well. How do I define really well? It should have easily been a 5 or 6% year from a CapEx perspective, and it's actually going to wind up being a flat year at best. It could actually even be slightly down. That's entirely the result of trade. So I think you get this sign, and I think that you remove a major hurdle from a capital expenditures perspective.
You see all this optimism every time that there's an indication, a glimmer of hope on the trade front, and yet we're dealing with these trade issues, not just between the China and the United States, but also in Europe as well. I don't know. When you're looking at the big picture in 2020 here, can we talk a little bit about business confidence, about the fact that this consumer survey, the CFO Council survey, found that 60% of the CFOs expect to reduce their headcount in 2020? What are the warning signs here that maybe the optimism generally is not so well deserved? John, what do you think?
Oh, sorry, Tom or?
Nope.
Tom.
Yeah.
Go ahead.
Sorry, why don't I just take it really quick? So what I would say is, with all due respect to that, I don't know what that CFO survey you just mentioned was, but, the Duke CFO survey, which, sort of been around for a long time, that was actually pretty clear in its view on what headcount's going to do over the course of the year. And that's to say it's going to look pretty good as 2020 evolves. In fact, the small business survey, where, we've generated quite a number of jobs, although recently it's sort of suffered at the hands of trade. The small business survey is also saying that, their view on headcount is a positive one. So, look, I would say if you just take a big step back, job growth is going to slow down in the coming year. I mean, that's sort of built into our forecast. We're averaging about 180,000 over the course of 19. We expect we'll slow down to about 125,000 in 2020. That's just a demographic reality. We've pulled almost all the people we can from the sidelines, so growth will necessarily slow down.
So, John, let me ask you a point of question. You can follow on what Tom just said or respond to this. A lot of people have said that the trade tension has been a wet blanket on global growth. If some of that trade tension is lifted as we turn into 2020, does that make 2020 a year to invest internationally, in addition to maybe maintaining positions in the United States?
That was actually the point I was going to make. We're so focused on the U.S. markets, the U.S. economy, but the trade tensions have actually hurt the Eurozone even more so. So the fact that the trade tensions get lessened, which we all hope we're going to see, that will help the the European economy, and that will flow into our financial markets here. What we actually think we could see is if the European economy start to improve, if confidence increases in the U.S., as we were just talking about, maybe we could see a little pop in capital spending. You could actually see interest rates creep up here a little bit. So we actually would love to see business confidence increase and see interest rates rise a little bit. That would be a great barometer that we're on the right path.